Thank you for taking a few minutes to look at Gravity's reporting structure. At the heart of any accounting system is the chart of accounts and the reporting structure that really drives the way financial reports can be designed and delivered to end users. So some time should go into designing the actual reporting structures so that we can achieve the end goals of reporting in the types of metrics and the types of reports that management wants to see. So at the heart of Gravity, there are three main building blocks. The first one being the company code. It is a separate data element. Many people want to try to build a company code into the chart of accounts, and in Gravity we don't need to do that because it is a separate element. We have a segmented chart of accounts. You can have one segment, two segments, or more, and each segment can have intelligence or meaning. So as you see in this example, the second segment could be a territory, and the third segment could be a location. And then finally, we have the ability to have one or more dimensions. The dimensions basically help define an additional reporting element. Now, dimensions are usually used for more transient type of information, and the chart of accounts is more static type of reporting information. As an example, you may end up with a chart of accounts segment for a location. Let's say we have a set of urgent care facilities, and they are in separate companies. And so we would probably set up a segment for each of the locations because they don't change very often. We may add a location, but they're not very transient. Now, we may want to also track how doctors have revenue and direct expenses from doing work in these urgent care locations. So we'll set up a doctor as a dimension because that's a bit more transient. Doctors will come and go. We may hire more doctors. They may go on leave. So this way we have the ability to not build a huge chart of accounts every time we add a doctor. So this gives us lots and lots of flexibility to be able to use the company code, the segmented account number, and a dimension. Let's look at this in practice. So here is a simple journal entry screen, and you'll see here that I have a company code, I have a segmented account number, now in this case I have two segments, and I have three different dimensions turned on. Now, dimensions can be driven by many things, including the actual account numbers that we're using. This journal entry, by the way, is crossing companies. This is a multi-company entry. So for example, we may be taking payroll and actually allocating it to multiple companies, and we want to tag the employee on each line so that we can easily get a direct P&L or direct expense report for each employee. Additionally, we may be tagging it with other information. So you'll see here a little lock on the dimension field because we have rules that are set up as to when a dimension can be used. For example, we're not using dimensions on our cash accounts, but we are using dimensions whenever we have a salaries account. So dimensions can give us that extra reporting element. Now, dimensions can be turned on at any time. You may start the financial reporting without dimensions, and later somebody may come up and say, well, it would be nice if we could track a project, or if we could track an employee cost, or we could track by department, and maybe that was not part of your chart of accounts. So locations or dimensions can be turned on easily. Now, what controls dimensions? Well, they're controlled by any of the master files on a screen. So in this case, it would be something like a account number. And here you can see on the 6,000 management salaries account, we are actually telling it that any dimension is available, but not required. So we can say dimensions not being used, it's optionally being used, or it's required. If it's set to being required, then it'll always be needed whenever we use this account on one of our screens, whether I'm entering a bill, a journal entry, so on. So dimensions can be very, very powerful. I want to show you how we bring some of these elements together in a financial report. So we have a financial reporting tool called our Advanced Financial Reports, and it's a column and row based tool. So in this case, I'm using segment filter. So I've got a two segment account number, and I'm saying take the first segment from this row and match it with the second segment from the column. I also have a company code in here, so I could have different companies in addition to different segments here. Or I could even select all companies if I wanted to and say I want to do one segment across all companies and bring together maybe a line of business into one column. So this works together, and you'll see the option of bringing in dimensions. So maybe instead of a segment here, I want to use a dimension. So I want a P&L by a doctor. I could do that, for example, by putting a dimension here and picking a doctor in this column, another doctor in this column, so on, and I would be matching it up with the information in the rows. So what this is going to give me is the ability to have a very sophisticated financial reporting if I need to, using, again, segments and dimensions and company codes. So again, you see them all here: company codes, segments or dimensions, and of course part of the chart of accounts here in the rows. So thank you for taking a few minutes to look at Gravity's financial reporting capabilities.